Hello everyone, welcome to the live stream. It's James here. Welcome to all of you. We start in a couple of minutes' time. Hello Emily Trading, lovely to see you. Good day Somnath. Nice to see you, mate. It's James here. Okay, well that's all working quite nicely. Well, it's Monday morning, folks, and it's a new day. An interesting week lies ahead, I guess. So we'll get into some of the interesting things, incredibly interesting, actually, including some of the energies, Bitcoin, metals, and of course the stock markets. I'm going to give away a few memberships quickly. I'll do some more at the end. Maybe I can't do that. So folks, if you can hear me clearly, just please indicate that in the chat and just let me know. Good morning, NK, Upal. Nice to see you here too. Hi there, Mol. Good morning to you, and Ray, and Harinder. Good morning to you, and to Nikhil Prasad. Good representation from India, it seems, today. So welcome to everyone from whether you're in Mumbai, Coimbatore, New Delhi, Kolkata or Kolkata. I'm sure one of those. Or even Old Delhi. Good day, Ritesh. I'm just going to wait for 1 minute, folks, and while I do that, hello, player from Melbourne, and Martin. Always good to see you, and Blue Jail. And Stephen, good afternoon to you, Stephen Pemberton. Amit Chowdhury, good evening to you too. Okay, folks, it's time to start, so let's go into the charts. And once again, if you have any questions, please post them up right now, and I'll get to them at the end. If you don't have any questions, then don't post anything up, and I'll probably cover what you're going to ask anyway, and we'll get into it. Yeah, so let's get straight in. If you are not a member or you haven't liked and subscribed, please do so now too. There are buttons below the video. I'm going to start off on this page, which is the crypto page. On the top, I've got Ethereum, Bitcoin, and XRP. And along the bottom, I've got gold, silver, and copper. My positions are currently long on Ethereum, Bitcoin, and XRP. And Bitcoin, let's just talk about, I really don't want to talk about the sort of, Ethereum and XRP too much. We're long on all three, but basically what we've got to do here is get Bitcoin moving up through this channel top. Now, this is a pretty important channel. As you can see, we've touched the top twice, we've touched the bottom twice, and not only is it a channel, but it's a bull flag, and it's very, very neat, a little bit too neat, but so far it's holding the pattern really well. Now that we've reached the top of the pattern, top of the bull flag, it was obvious that we were going to find some rejection there as we reach that really, really important resistance level. A break and a close above there will set Bitcoin off for its next bull run. And if you're a technical trader, like I am mostly, you'll know very well what this pattern on your page means. We've got a bull run, what's also known as the flagpole, and then the bull flag, which is the rectangular downward sloping portion of this pattern. So we get a flagpole, a bull flag, and it's called a bull flag because it's a bullish pattern. The next move is normally higher. A very easy way to calculate the target for this, because we are going into fresh air, we're at new all-time highs. We recently touched 112,000. So an easy way to do this is simply by copying the run up to the bull flag and duplicating it. I'll do that for you quickly on the page. I did this in one of the last live streams, but I'll do it again. So there's a toolbar, a tool on TradingView called bars pattern. And if you click on that tool and start drawing it from the very bottom of this bull flag or bull move up to the top, and it just draws really the pattern of those candles. And then what we do is we just grab that. You can copy it, you can duplicate it if you want, and leave that one there by cloning it. I'm not going to bother with that. I'm just going to pull it across. And what we do is we start it off at the bottom of the flag and not the top of the flag. So we're basically projecting the target for this move. It's very interesting when I draw this fractal how it's actually followed a pretty similar pattern to what we've seen before. So this consolidation around here at the top of the flag is very similar to the consolidation we saw over here on the left-hand side of your chart, in that, in this case, it wasn't a flag, it was actually a triangle, a pennant, if you will, and we broke out of there with a very, very sharp move. In fact, from the bottom of the pennant at 84,000 to the breakout top at 94,000, we rallied $10,000. So it's just interesting, by drawing that fractal, we can see that we're consolidating in a similar manner at the top of this bull flag pattern. So what we can do now is to look at to where that ends up to see what the target is for this bull flag pattern and the workout. And lo and behold, and I've got to drag this quite a long way down, that takes us all the way up to $136, $136,000. It's also interesting that it's also the top of this red channel line, which I've got drawn in here. And I'm going to reset this just to show you where that comes from, if I can remember. All right, so it's basically the top of these lines here, which is not perfectly drawn. It's better drawn on the day chart. Let's just drag it down a wee bit. So somewhere up into that red line on the weekly chart is kind of where this bull flag technical target ends up as well, actually slightly above there. So there's a good target, 135,000. We've got a fib extension at 146 and another one at 164. And those are my two targets for Bitcoin this year. And I think we could follow this sort of fractal quite quickly and quite dramatically with a big squeeze and breakout from where we are currently trading. Let's reset this price scale. So there's the bull flag. We're consolidating at the top, underneath the top of the flag, and the breakout could lead to a very strong rally like we saw at the initiation of this bull move. And that could take us a $10,000 rally up to 118 from the bottom of the flag, bear in mind, or from where we are currently, 108 to about 118. That's the first $10,000, and then there's another $10,000 that goes on top of that after a fresh period of consolidation and then another rally. So that's the sort of thing I'm looking for Bitcoin. I think all the conditions are right for this to start getting its next move up. It's very interesting that it so happened to occur in this very, very beautiful bull flag pattern. And what's most fascinating about this for me is that this pattern is being so neat and so perfect and so bull flaggish, I suppose, which you don't normally get, not such neat patterns. Two at the top, two at the bottom. We're trying to bust up through the top right now. So that's Bitcoin. And the reason I haven't covered Ethereum and XRP, because these all follow suit. You can see my existing positions by looking at my green arrows on the chart. Bitcoin, I've got positions all the way down at low 70s. Got a whole bunch down there. And then I've got a whole bunch at around this $100,000 region that we're currently trading in. And I've got a few positions on Ethereum and XRP. Most of my positions are on Bitcoin, being a bit of a Bitcoin maximalist at heart. I'm like that with all the other instruments. I'd rather trade gold than gold miners or gold ETFs. I'd rather trade natural gas futures rather than cold or any of the other leveraged ETF type stuff that you can trade on natural gas. So I try to trade the root sort of commodity or asset. In this case, it's Bitcoin, but I think the others will follow suit. Now on gold, talking about assets, gold and silver and copper, if you'd watched the video yesterday, you'll know that I'm long on silver and copper, but short on gold. Let's have a look at gold quickly. I was a little tempted this morning, although I've moved stops now to break even at $330.31. I've moved stops to break even, but I was a little tempted to maybe even take some profit off here underneath the trend line earlier this morning, today, when we started pushing up. But I did realize that we are underneath the trend line now, and that this push up only went back up to the underside of the trend line. There's also the 20 and the 50-day moving averages above us. both curling down now, and we're below both of them. So we may or might need to retest some of these moving averages, the 50, the red one, or the green one, which is the 20. But these are starting to curl down and will move down more rapidly. So we tried to get back up through the trend line earlier today, but failed so far. And my targets remain as they have been all along. First of all, 31.20 at the bottom of this potential bull flag. Now, if you look at the stripy Fibonacci retracement pattern I've drawn on there, and imagine that that's just a bull flag rectangle, we could get down to the bottom, back up to the top, back down to the bottom a couple of times before then busting up through the top in what is a bull flag. The breakout point or target for that would be the run up to the bull flag, followed by a similar length. And I don't know where you'd start, probably from down here at about 2,600, down up to there, down to the bottom of this flag. That was up to about 3,500. So $900 from where we started this bull run to the top of the flag. And if we took $900 from the bottom of the flag, if we get to the bottom, if we do actually get there, we'll take it from both sides. So $900 from 31.20 would take us above $4,000 on gold. If we start from more or less where we are now, and we don't get down to 31.20, and we start off from here at 3,270, $900 is 4,170, so closer to 4,200. So targets for gold, once we've resolved this pullback, whether it's where we are currently, whether it's down to 31.20, or whether it's all the way down to 3,000 or below, whatever those targets are to exit the shorts and reverse and go long, that target should take us up to around about the launch from that target, our entry target, whether it's 31.20 or 3,000, or currently where we are now. The target for that next move is $4,000 or $4,200. We're currently trading at 3,200. So that's my kind of approach. I'm bullish on gold, but I'm waiting for the pullback to buy further into. Whilst we're pulling back, I'm shorting the gold play, which is not normally something I do. I normally try to stick to one trend direction. I try not to swing both directions most of the time. I try to swing in the predominant direction, but I kind of like this gold pullback. Gold for me is a fairly predictable instrument, and even the current level to which we pulled back, most people thought we weren't going to get that. So a lot of people are surprised that we've even dropped this far. I would not be surprised if we got to 31.20. In fact, I expect it. And I would not be at all surprised if we got down to $3,000. This is what gold does. I trade it fairly well. It's one of the instruments that I like. I kind of understand its personality, and it's doing what it normally does. Also, the COT report indicates that there's been a lot of overcommitment to the long side in gold, and there's been a shift around to the short side in the commercials and the hedge funds and so on. So that's gold, but remember I said I'm bullish on gold even though we're short, and in lieu of that, I've also been bullish on silver the entire time. So we got long initially down here at about 31.5. We got another long position here at about 36 and a bit, and we remain long on silver. So we have longs on silver and shorts on gold, but we've taken profit about 4 or 5 times on both plays. We've taken profit on the long silvers, we've taken profit on the short golds. So we're currently still in that situation, long silver, short gold, and we're also long on copper, and I really do like this. And I must just say, if we close at about $5, which is where we are right now, today's the last day of the month. So if we close today above $5, that will be the highest price that copper has ever closed at on a monthly basis. So very, very bullish for copper. We got long at about $4.72, thereabouts. We're currently trading at $5, so a good profit on that already. And I'm hoping that this will hold its gains, perhaps even hold the current level where we are right now. We've got an inverse hammer candle, yesterday's candle, which is a slightly bearish candle. But we've had this sort of thing before on copper, lots of one up, one down sorts of candle patterns. So this instrument, this metal, doesn't respect these spiky candles as much as you might see on perhaps natural gas or gold or the euro against the US dollar. So we see a lot of these reversal candles, which never actually do anything much in the end. So we're still long on copper, looking for this to move higher. And today is going to be absolutely crucial. So last day of the month, if we close above $5, that will be the highest monthly close that copper's ever performed. And that's bound to trigger some eager hedge fund managers junior floor traders and unsophisticated algorithms to keep buying. So that's kind of where we are. But don't be spooked or don't be surprised by a fairly strong pullback. Remember, it's called Dr. Copper for a reason. And if the economy starts to undergo some problems, then copper is likely to do the same. Let me just have a sip of this. So Dr. Copper is a good indicator of the economy overall. It's used in all sorts of things, in industry, in electricity supply. Electricity is a big indicator of the economy overall as well, and that's reflected in the natural gas price too. But it's used in electrical stuff, it's used in electronic stuff, it's used in AI, chip stuff, it's used in computers, it's used in weapons, it's used in just about everything. And it's cheap. So I think we could see a bit of a move up on copper, and I think it's probably, along with silver, one of my favorite plays. I'm not too sure about gold. I've got a target of $4,000. Don't know how far that's going to pull back. Let's go across to natural gas and oil. And if you've been following me on X and on YouTube, you'll know that I've got no positions on natural gas, and I'm waiting for the next 4-hour candle to roll over. That's in 1 hour and 47 minutes time from now, the next 4-hour candle roll over. And you can see where we got in. Let me just recap what we did. We got short at the top here. I think you'll know all of this, so I'm not going to spend time on it. We got short at the top there. We got out at the bottom incrementally, one there and one there. And then we reversed direction and went long. That was on Friday. And then on Friday, we got out at the close of play, very close to the end of the day, right at the 100-period moving average. And because we had the weekend coming up, weekend gaps, as we see, we had a little tiny downward gap on the weekend. And also, there's all sorts of stuff going on still, unresolved by and large, well, apart from Ukraine and Russia, but also in the Middle East. So a little bit risky holding over the weekends. Natural gas is always a bit risky, but particularly right now. As it turns out, it was a good idea to exit that trade because we've moved down almost back to where we got in. So we're not in any trades right now. My general idea is that we'd be trading between $3 and $4, something like that, maybe slightly higher than that for the rest of this year. And so look where we are. We're at $3.50, right in the middle of that range. Let's zoom out a bit on the day chart and see where we are. So let's draw in $4. You can see basically at the top of this last peak. And $3 is down at this the bottom of this green block down at the bottom here. So top around about $4, green block at the bottom around about $3. And look where we're trading, right bang in the middle. After a big bullish candle on Friday, reversing against the direction of trade, confusing and surprising a lot of people. A lot of people were bearish. We got long. I know it was an unpopular trade. A lot of people were bearish, expecting this to break down through the 200, keep moving down towards $3 and below. But anyway, we managed to get some of the long, but we got out, and we were lucky to get out. It's moving down now, and I don't know how far we've moved down, but we don't want to go below 78.6% of yesterday's candle. So let's have a look at that and see how far we've retraced. So I'm going to take it from the bottom here, and I'm just going to draw a quick Fibonacci study in and see how far we've dropped down. I'm going to assume that we're still bullish, aiming for $4, but my mind might change on this, and I don't have any real strong directional bias. Look where we've pulled back into, exactly the 61.8% Fibonacci retracement level, and then the 78.6% fib is down here at 3.47. We're currently trading at 3.55. 3.47 is the next fib retracement support level. It's also a very key level, as you can see, previous support over here, and the bottom of this order block. So could we get down that far? Possibly, I don't know. I would like to see how this 4-hour candle closes to see if maybe we get a sharp reversal, we start moving up, or we just keep on moving down, in which case I'll have to reconsider the following candle after this one. But so far, it's looking pretty bearish, even though if you look at Friday's candle, it was a massive bullish reversal candle. And today, so far, is just an inside day with that little gap down below the 100-period moving average where we got out. We've just gapped down, which means that this candle today, the current candle, is an inside candle, inside bar. And if it remains like that, it's basically a continuation bar, and we should see it moving higher. With an inside bar, look to the left, look at the bar to the left of it, or the candle in this case. The candle to the left of it is bullish. Then we get today, which is so far an inside bar or candle. We don't know if today's going to close like that. It's the last day of the month. It's an important day. And we'll look at the weekly and the monthly chart on tomorrow and see how we closed. But if we do close something like this today, where we are right now, it's a continuation pattern, and I'd expect the next move would be up. We'll have to wait for the close of play today to see that, though, so we can't make that judgment just yet. But so far, an inside day, and the previous day was bullish. We have to remain bullish in our bias, but we'll watch the candles as we go along. Next candle rollover is in 100 minutes from now. So we've got some time. All right. Now on uranium, URA, we have no positions. Just to recap, we got long down at the bottom here. We got out there. We got out there, 25% at the orange arrows. And we took the final 50% right at the top here. I'm looking for a pullback into the yellow blocks, one of either this one at the top or the next yellow block further down. I prefer the next one further down. The next one further down is where the 200 and the 100 period moving average confluence is, and it's also below this gap. There's a massive gap right in the middle of your screen right now, and that may need to be filled. So what we could do is expect a pullback down to this sort of level. First of all, we've got to get down below the 20 period moving average, the green line at the top here, and then move down. And unless that happens, we won't get long on uranium for some time. However, because of that, we also remain long on UEC. Having got out of our URA position, I do want to have an exposure. I want to be involved in this market. So we have a long UEC position from $4.69 and one from around $6.50, 47, something like that. And we're currently trading at 676. So both of these positions are in profit. We're forming a rising triangle here, an ascending triangle. Let me put that in for you, if I can, which I can. So let's draw in an ascending triangle, something like this. All right, so that's UEC. We could actually just cut off those wicks a little bit. So yeah, probably a good place if you want to get involved in uranium and you're not long on URA or UEC, or there are a couple of other uranium ETFs that you could trade. But I like this one very much. We do have a rising ascending triangle. It's a breakout pattern, which would break out to the top side. And most of the time, 65 to 70% of the time, this will break out higher. So, you know, we're pretty close to, we're sort of in the middle of the triangle at the 20 period moving average. And it's a good place to be buying if you want to get involved in uranium longs. Right there at the 20 period. We're currently trading at 676. We're in from much, much lower down, $4.60 something and 644. But there's still a chance to get into this one. And then on URA, if you want to, and I'm really quite bullish on uranium. I think these are good plays. This URA trade has been really too neat, too long, too linear, holding the 20 for way too long. I could put a trend line in there. It would mimic the 20 period moving average, just about. Let's make it black. And yeah, so we've got to get down below there. Of course, we could, I mean, if you're an aggressive or if you're a short seller of URA, if you believe uranium's got a really good pullback, which it probably does actually, all the way down to about 28 or 30. We're currently trading at 38, so it's a long way down. We may have to stall here at about 33, 34, but nevertheless, we've still got some space. So you might want to trade that. I'm not going to trade it. I'm looking for a dip down into these zones to buy. That's URA. And then UEC, as I said, there's a chance to get in on that now, but URA is probably overextended. Let's have a look at WTI oil. And if you recall from the video yesterday and the last live stream, we've not changed any positions apart from taking profit right here at this market structure break level, my blob, and the 50 period moving average. We've got Moab above us, the orange-yellow zone, where you can see Moab written on your charts right now. And that is the major mother of all breaks, not mother of all bombs, bunker buster. It's a kind of a bunker. We're inside the bunker now. We did try and squeeze out through the top with what was going on in Iran and the American B-2 Spirit bombers destroying, or at least we think so, most of the nuclear facilities and enrichment and so on, centrifuges in Iran. That's what caused the spike in oil. We're right back down below Moab again. and we have not been able to get back up above Moab. I've told you many, many times that this orange Moab level is really, really important. And the fact that we broke down below it, got down to the bottom of the channel, we've only just retested the top of the channel, which I always said was a probability or a possibility. We got to back to the top, exactly where I wanted to sell. We sold a little prematurely just before the top, and we sold just after the top. Our average price was precisely the top of the channel. And we've moved all the way down now. We had a big position on there, and we took profit all the way back down here at 63 and a bit, $64. So a massive trade for us. But where do we go from here? Right, now we haven't managed to get back up through Moab. Really, really important level. And I think we'll trade below there for the rest of the year. And that's at around about $65 to $66. There's always a chance we could squeeze a little bit higher back up again, above or at least to the top of Moab at around 67, or even up slightly higher. I think that's less likely, but let's see what happens. The last 4 or 5 days have seen us stuck in this tight range underneath Moab, and we have a 25% position still left on here. I'd like to add some more if we get a bit of a rally, but if we don't get a rally, I'm going to hold my 25% for a breakdown below the 50-period moving average, the red line, this order block, back down to the bottom of the channel, this double bottom at $55, and then eventually probably bounce off there initially, maybe several times, but eventually a breakdown through there, down towards $50, and maybe even below $50. So that's all of that. We've talked about metals, we've talked about energies, we've talked about, have we talked about the stock markets? Probably not. Let's have a look. NASDAQ, S&P, all breaking new all-time highs. That green line on the NASDAQ is the recent all-time high, double top all-time high. I've drawn it in there in green so I can see where we are in relation to it. The next target for the NASDAQ is the channel dotted center line. I'm going to show you where that comes from shortly. My blob and the top 200 period Bollinger Band, and that's the first target. Let me show you where this dotted channel center line comes from by zooming out. And you can see we've had this channel on the NASDAQ for such a long time, going all the way back to 2022. When Trump's Liberation Day policy, tariffs took effect, we broke down through the bottom all the way down to 16,000. We bounced all the way back up again. Once we completed a I think in this case 23% drop down, we entered a bear market on the NASDAQ. It's very unusual for this to recover. It's happened a couple of times before, but for this sort of sell-off to recover immediately and go on to new all-time highs and continue rallying, it's possible that we might stop there at the channel center line, top 200 Bollinger Band, and enter a bear market. It's possible we could get even higher, up to the top of the channel again, and that's all the way up at about 25,000, up to that blob there. So that's where we are in the NASDAQ. Do we have enough legs for this to keep moving up towards my top blob? Or is this market done, finished, over? Are we going to turn at the channel center line and roll over and start to move back down to 16 and a bit, 16,500? I really don't know, but for now, we need to get long. And I'm not long at all at the moment on the NASDAQ or the S&P, but we've been long on the German 30, we've been long on several stock names. So we've been long on the market, but just not these two indices. So we need to get long. Right now, I've got a short position from there, a short position from there, and those two positions are fully hedged. In other words, the position of this orange arrow upwards, a long position, is equal to the size of those two positions added together. So we do have a long position, but we've got these two short positions that we're dragging behind. Not very far behind, but we have a deficit, a gap. And I need to get long. My idea generally in theory is to maybe try and take some profit off here at the top on this long hedge position and add some shorts for a move back down to the breakout level, the green line, the all-time recent high double top. In order to exit those shorts, by then I'll be in profit and reverse back to long again. In other words, a simple breakout pullback trade. Let me draw what that looks like for you with the trusty path. So something like this, just try and imagine that, up to the channel center line, top 200 period Bollinger Band, reversal candle, down to there, and we could exit our long trade right there. We got a long orange long trade. Let me zoom in. Exit the long trade right here. There's the long trade, the orange arrow up, and add a short for this to come back down to the green line, the breakout level, the all-time high, and then a bounce off for a resumption of the uptrend. That's my kind of idea. We need to get long on the NASDAQ and the S&P, and we're not currently long, so we need to do something like this. And if I extrapolate that even further, we could look at something like that. Okay, so that's my idea on the NASDAQ, very similar on the S&P. I'm going to try and take some profit on this long trade up at the top Bollinger Band, channel center line, maybe. I'm not committing to that just yet. I need to see some clear signs of reversal. But then in that case, I would take the profit on the long trade, add a new short position to the existing 2 short positions down here, ride all of that back down to the breakout level, exit all the short positions. I'll probably be at break even or a small profit by then. Also having taken profit on the long trade, the long hedge at the top here, so it would be a net profit, quite a good profit, and then go long at the channel top there, or the breakout level, for a move up to the channel top at about 25, maybe 25,500. That's the general plan on the NASDAQ. And the S&P is not too dissimilar, really, because it's a similar chart, although we've only been fractionally above the breakout high for a couple of days now. So we've hardly got going on the S&P, whereas the NASDAQ's put some space between where we are currently trading and that NASDAQ double top all-time high. S&P has only just got going. So whatever we do on the NASDAQ, I guess we'll follow suit on the S&P. That's just not giving us any clear clues just yet, but I'd like to get long on the S&P too. And that's the kind of idea. Now, we have nothing on the German 30. We took profit on our shorts and our longs. And if you've been following me in the live streams and various trade updates, you'll know we got short there. We reversed and got long over here, taking profit on the short, reversed to long. We got out of the 20-period moving average, got out of those longs. So we had a magnificent trade, getting short a couple of thousand points, really. Actually, I'm exaggerating, maybe 1,600. Short from the top, out at the bottom, then long, and then out at the 20-period moving average. We did drop down a bit, held beneath the 20 for 3 days. We burst up above it, also pretty bullish. I'd like to try and get long on the German 30 at some point too. But there's a caveat to this one. We're still trading within the channel that we've been trading in all this time. The NASDAQ and the S&P broke down below the bottom of their channels. The German 30 did not. This channel's been traded within since 2022, and we still are within the channel. That means when we get back to the top of the channel, if that's the way it's going, it may be really difficult for us to get through here. So on the other hand, compared to the NASDAQ and the S&P, I could envisage something more like this on the German 30, a move up to the top of the channel, and then a rejection for a third time. We sold over there, we sold over there, and we might sell over there again for a move down to the channel center line and this previous swing low. I think that would be my preferred play on the German 30. It differs a little bit to the NASDAQ and the S&P, which I'm allowing for more of a short, sharp retracement and then a resumption of the uptrend. On the German 30, I'm looking for a stronger move up and then a much stronger reversal of the uptrend back down to the channel center line. I'm looking to get long on QBTS. We don't have position on this just yet. We got long at that gap up. We got out. We got short at the top there. We got out back down at the gap up again. And I'm looking to rebuy down at the 50-period moving average, a break through this gap, a close of that gap, a fill of that gap, maybe a peep, a fraction down below the 50-period and this channel top for a move up. This is the Quantum AI stock. So I'm interested in getting long on that one. Perhaps we'll get that chance today or tomorrow. And we also remain long on MSTR and Tesla. MSTR looking okay. Tesla iffy. Let's look at MSTR, the new Bitcoin treasury company. It's not called MicroStrategies anymore. It's called MicroStrategy. Sorry, that's a stupid thing to say. It's not called MicroStrategy anymore. It's called Strategy. So that's what it's called. But the ticker name is the same, MSTR. And yeah, okay, we're holding the 20 and the 50-period moving averages. We had a reversal candle yesterday. Not great. But look at where we are in pre-market. Right back up, halfway back up through this candle again. So perhaps we'll be okay. It's a very strong support level, the 20-period and the 50-period confluence right below us, and that's a pretty tough level to get through, and it should offer some strong support. Tesla, similar sort of thing, actually, and maybe even better, because the confluence that we've got below us on Tesla is not the 20 and the 50, it's the 50 and the 200, even more important. The bigger that number on the moving average, the more important it is. So we've got the 50 and the 200, and we're holding support there, just fractionally below the 20 period, the curving down green one. And in pre-market, we're just about $1 down from where we closed yesterday or on Friday. So we're long on MSTR and Tesla. We took profit on our ARC-K trade a couple of days ago. Was that Friday? I think we took profit on Friday morning. So basically just at the top Bollinger Band. We moved down fractionally from there, not by much. And in pre-market, we've bounced up a little bit. I'm looking to get long on this one again on any dips down to the 20 or any of these moving averages in confluence down here, or the channel top again, and to get long back on ARC-K. ARC-K, it's a very risk-on sort of play. You either like it or you don't. You either like Cathy Wood or you don't. I don't know really what else to say about it. I think it's got a chance. We've traded this a few times in the past, and I do like this pattern, actually. I think there's so much open space above it. Let me just show you. I just think it's a decent looking chart, basically. Big clear out down through the bottom, just to the channel bottom, 200 period Bollinger Band, breaking up through the medium term channel, and then breaking up through this black resistance line and the top 200 period Bollinger Band. I'm going to actually eliminate that top line, so just to get rid of the slight confusion that it may cause. And I want to show you how this looks compared to the channel without that top line. You can see how beautifully we thrashed our way out of that little whipsaw, thrashing about through the top, try to get through the bottom, back through the top, and this time it looks like we're trying to hold after a retest, breakout, retest. We got long on the retest at the 20 period moving average, and we got out at the top 200 Bollinger Band. I want to get back long on that one at some point, and also want to get back long on NVIDIA. I'm hoping this hasn't left without us, but there's the top 200 period Bollinger Band on NVIDIA as well. And whenever you see on any chart, any price reaching the top or the bottom 200 period Bollinger Bands, you should start thinking about potentially covering risk, getting out of the trade, taking profit, hedging, something like that. Pretty important levels and on any chart. So that's where we are on all that. And then on currencies, not all that exciting. Just to say on the euro and the pound, you probably know by now, we got in long down here at the 20 period, got out at the top resistance and the Fibonacci at my blob. I think these could carry on moving higher, but let's see if we can get a bit of a pullback on both the pound and the euro. The pound, we did a similar sort of trade off the 50 period moving average, not the 20. The euro, we took off the 20, and then we got out at the top Bollinger Band as well. So in and out, about 250 pips on both of those. So really good trades. We got nothing on either of those right now. We've got a short on the pound yen and a short on the euro yen. The euro yen, we're hedged, but some of it is not hedged. We have a very small unhedged position, but all of this stuff is hedged, so it's not in any danger. But I do have to point out that this pattern right at the top here that you're looking at as we speak is actually an ascending triangle. And maybe it isn't. Maybe it doesn't look too bad on the 4-hour chart. But on the day chart, it does definitely looks like an ascending triangle right there. And it probably looks like it's going to break out to 171. But we're mostly hedged on this, so I'm not too worried about it. I'll probably add one more short at 171 to add to this very small short here, and then we'll start to work on this hedge. Maybe start to take profits at the top there on these long hedges and start to work our way down, but we'll see how the price action pushes us and drives us. So that's the euro and the pound yen. So euro and pound yen, both short on those. The pound yen, we're not hedged, but we do have a very tiny position on this one. We got short at the top of the channel. We've broken out just to the top 200 period Bollinger Band, and I do think this is going to move down. But, well, it has moved down a little bit today, quite nicely. But at some point, I'll need to add some more shorts onto this. This is a very tiny position. I'd like to get a bit more of a handle on the short pound Japanese yen, GJ. All right, so we talked about energies. We're waiting for the top of the next 4-hour roll for natural gas to decide on that trade. We talked about URA, WTI. South African Rand, let's quickly talk about this one. I try and skip this one as often as possible. There we are at support. One up, one down candle yesterday, below the 20 period moving average still. And we got another long tranche on there yesterday towards the close of play. So we're long at 1776. 1776! They'll never get our guns. So we got long at 1776, and we got long slightly higher up at the 200 period moving average. And we'll see how that goes. Target for that is 20 rands to the US dollar. And then beyond that, up to about 22. We're also long on TLT, and I'm starting to get a little bit more fond of this one, and I think I might hold this one. We're at about break even now. We've moved slightly higher in pre-market, as you can see, just up to the 100 period moving average at about, where are we currently trading? 87.80. So we're at about break even, and I'm starting to like the way this pattern's looking. Rising, a falling wedge, really, but rising off that bottom there, making a sharp spike down there. Treasuries might just get a bit of a wiggle on here, might get a bit of intervention. Maybe some treasuries pressure will be released by the Bitcoin treasuries. And it might sound weird to you, but it's a concept that people are talking about. Are these Bitcoin treasuries going to take some pressure off the US treasuries, the dollar-denominated treasuries? And that's possibly quite likely to be true for various reasons. And it's a little bit complicated. I don't totally understand all of it, but I kind of do. And that means we could get a bit of a bid on TLT and see this moving up. But we do want to see the US 10-year holding down in order for that to happen. And it is holding down. And there's the big tariff whipsaw, Liberation Day. We really managed to stay within that, contained mostly within that purple blob. We haven't managed to get much above it. We're not below it. And so we're still stuck within that whipsaw. We don't want to take any trade decisions or any important ideas coming out of this until we defeat that zone. That zone is nonsense. It's fluff. It's noise. And you could actually just delete that from your chart and take that away altogether. And you get a much neater looking chart, which looks a lot more bearish than it does with that tariff whipsaw in the middle. And if it is bearish, that should push treasuries up. And then finally on softs and grains, well, I'm going to go through them one by one, not make too much comment on each one of them. We're still long on sugar. It does look it's trying to base here. And instead of going down, we're now going sideways at that support level and at the channel bottom. And we have a falling wedge and falling channels, all that sort of thing. All looks quite good for sugar to base here. We've got a few positions on, and we took one quite recently, right basically where we are currently at the moment, and we've got a couple of slightly higher ones. That's been pretty disappointing and boring and not very profitable, really. Not profitable at all, but not particularly negative either. Now on cocoa, we have no changes to this, still looking for this pattern to play out. We're still short from the red arrow, looking for this to move down. Don't know what else to say about that. And then coffee, we no longer have any positions on coffee. We took profit at the channel bottom, and I'm looking for this to bounce up to resell. And maybe we could even get back up to the channel top. That would be fantastic. I don't think we will, but maybe we will. Who knows? If we got all the way back up to about 350 to 360, that would be a great place to resell coffee. We're currently trading at 307. So watch the channel center line at, actually there's a very good spot right here in the middle where these two channel center lines intersect. Watch this level very closely. And this is at 322. We're currently trading at 307. So watch 322 and then watch the top of this channel at about 350 to 360 to add some more shorts. Oh, I forgot to tell you, target for coffee much, much lower down, following my red arrow and down to these much lower levels. But yeah, we've got a little bit too far too fast. My red arrow kind of follows the angles that coffee generally trades within, the sort of shape of the chart. And you can see that this drop off down to the channel bottom has been way too fast. And we got a little bit ahead of ourselves. We could bounce back up to the channel center line or the channel top. So that's coffee. Corn, we're still long. Thought we were going up yesterday. We were. One small pathetic little position on there. We've been variously long and short on coffee over the last couple of years, on corn, and we've taken a couple of long positions from way much lower down in this green block, and this last position was really on the pullback after having taken profit at the purple line. This is like a pullback rebuy, but it's flopped down. Not a big position, and it's not very exciting. Cotton, on the other hand, is looking a lot better and trying to get a wiggle on. Pull back, a little bit pull back today. Not much, but we had 1, 2, 3, 4, 5, almost 6 days of green or white candles, so rallying strongly, and this is probably just a bit of a correction. Right back down to this double top twin high around $66, and I think that's kind of where we are resting right now. If we can hold there today, that would be great on cotton. Looking for this to move up much higher again, and you can see my green and red lines across the chart on cotton there, which indicate my targets at $70 and $74. We have nothing on orange juice, and this is moving down still. I don't know, very messy. I wouldn't mind another retest of this top level at about 320, 325 to make a slightly longer bear flag here for an opportunity to sell at the top. Let's see if we get that later on. We need to rally up from where we're currently trading at 230 all the way back up to about 290, 295, and preferably up to about $320 to sell back into. And maybe a bit of a bear flag range and then a drop down below that bottom. And then wheat, I know quite a lot of people suddenly trading wheat. I'm not sure why, but anyway, I've been in this trade for a long time. There's my entry position. We're just below it at the moment, and we've got this Fibonacci retracement level. We retraced 61.8%. The bottom of the yellow zone is the 78.6% Fibonacci retracement. It's also these previous swing lows. I think we may have to retest that. I don't know. But so far it looks okay. We did break out through the top of this channel, this falling wedge, which means it's now broken and defeated, and we should be able to push up further now that that line has been weakened and that resolve has been tested and found wanting. So I think the next moves should be trying to base around here and then a move up through the channel, move up through that high, and you can see some of my targets up here at these previous swing highs. And that's it really. We don't have anything on soybeans. I'm looking for this sort of thing on orange juice, by the way. There's the soybean chart. Look at the move down, move across the page in a beautiful bear flag, what it looks like at the moment. Quite long and quite neat. And we were talking about orange juice. We want the same sort of pattern to develop here. We want this quite long and quite neat. And so I'd like to see some moves back up to the top here to sell into, to form this horizontal rectangle, bear flag, and then the move down below that. And that's everything today, folks. I think we've covered just about everything that we could think of on all of these charts. And I'll try and read some questions and get to some of them. All right. So, good morning to everyone. Joy Deep, good evening from India. Emily Trading, thank you for confirming that the sound's good. Good day, Michael Savage. Another week of opportunity, that's for sure. Got loads of things this week coming up. And I think I'm really excited about Bitcoin, the stock markets. If we can just get those dips back down to those breakout levels on the NASDAQ and the S&P, we're long and strong on some of those good tech names. Magnificent 7 back in vogue again. Bitcoin, XRP, Ethereum. I think we're going to 150 on Bitcoin, folks. And a couple other things, gold and silver and copper. I think if we can get gold and silver and copper all in the same direction at some point, it'll be fantastic. And I think we could see a big bull run on gold, copper, and silver. We're just going to get copper buy in place as well, like we've got to do on the NASDAQ and the S&P. So, yeah, loads of opportunities. Good day, Jazz from California. Jazz, I see you asking about how do you get notifications about these live streams. On YouTube here, there's a button below. If you've joined the channel, or subscribed to the channel rather, when you press the subscribe button, you can all do that right now if you're watching. On your subscribe button, there's an option to, or it's next to the subscribe button, I can't remember now. Anyway, there's a thing that looks like a bell. You can press that bell, and whenever there's a live stream, you'll be notified in advance by YouTube automatically. But also, if you're on my mailing list, you'll get a notification by email about the live streams coming up. So if you're not a member, if you're not subscribed, please make sure you do that. The button's below this video. Subscribe, click the notification bell, join the channel for $1 so you don't miss anything at all. There's a join button below as well. And if you really want the whole lot, come and join us in the private trading group. And the links are below that in the description. And if you don't want to do any of those things, there's another thing you can do below in the description, and that's you can get hold of the Trader's Survival Kit. It's a free guide on how to survive the risk factors in these difficult markets. That link's below as well. So please choose one of those options. Most of them are free. All right, so that's Jazz. I hope that's answered your question, Jazz. Yeah, Stephen, you want entry levels to short cocoa. Let's have a look at this quickly. Let's go to the cocoa chart. I think I may have covered it, but let's have a look. Where could we sell this? So I'm already short on cocoa. I'm not planning personally to add some more. But if you're not short on cocoa, you may as well have a go here, to be honest. You know, we've moved down, we've pulled back. If I put a tiny little fib retracement in here, we've probably pulled back 38% of that move down. Yeah, 38% pullback right there, top of the green zone. So that's a 38% pullback moving down. And I think this is okay. But I'd rather be selling probably towards the top of the channel if you do get the chance. I'm not sure if we will. Probably not. It looks like it's moving down. We've got a little mini trend line. We're making lower highs and lower lows, moving down towards this path. So if you want to get short on cocoa, you may want to consider a small amount right here, an entry level amount, a small tranche, and then with the idea to maybe add some more at about There was a weird noise. 10,300 at the top of that swing high over here with my red arrows. Actually, that's where I got short. And then also at the top of the channel or even into the red block at around about 10,700 or even as far as 11,400. But I think you could have a go right now and get at least a small piece on. And if you don't like the way that behaves once you've got that trade on, which you probably won't because it's sod's law, isn't it? Whenever you put a trade on, it immediately starts doing things that you don't want it to do. But if it does something really strange, really weird and hectic, you could consider hedging that immediately. And then you could have a long position and a short position open at almost the same price and manage your hedge, which is what I prefer to do rather than just not be in the market at all. So if you want to be in the cocoa market, you could do a couple of things. You could put one trade on now. You could put some limit orders to sell higher up, or you could put one trade long, one trade short right this minute, and then work that hedge. A lot of people won't understand what I'm talking about and will say, I'm a fool. Why would you enter a long and a short exactly at the same time? I think the reasons for that may be quite well explained actually in the Trader's Survival Kit. I can't remember exactly whether I covered that, but I think I do. I mean, I do cover hedging in great detail in the Trader's Survival Kit. Link below. It's free. Click it, download it. Let's chat about it in the next live stream. So that's what I'd say on cocoa, Stephen. Try and get a small entry now, either fully hedged immediately or just have a little go. And if you don't like it, hedge or wait for a rally up to the top. And you could put limit orders in there. Robson Jr., good day to you too. Would you please look at US dollar PLN? Do I see any opportunity there? Okay, I don't observe that one, Robson. So I'm not going to cover that right now. I just really want to get through what we're sort of covering here, the most important movers. But we can look at that in the next live stream, perhaps. It's not something I observe, and I don't really like commenting on instruments that I don't trade myself, that I don't trade regularly, that I don't know intimately, because all instruments trade differently. They all have different personalities, and they all react in different ways to market demand, supply and demand, money flow, news, economic and political events. All of the markets behave in completely different ways, and it's so I don't like commenting on something that I don't personally trade, because it would just be basically BS. It would be me giving an opinion, and you know what opinions are like. Everyone's got them, right? And I don't like giving an opinion on something I don't understand fully myself, intimately, totally intimately, and therefore I don't comment on instruments that I don't trade, because I might mislead you. I might say something really stupid and really bad or wrong or whatever, and that totally misleads you. So I'd prefer not to have to do that. All right. Good day, Adam Kane from Budapest, Hungary. Budapest, beautiful city. Have a nice one today. Interested to see NatGAS and NASDAQ by the end of the day. Thanks, Adam. Appreciate your comment, mate. Yeah, we're all interested to see what happens with NASDAQ and natural gas at the end of today. Yeah, I think, basically NASDAQ is probably just going to keep going up. And natural gas may just keep going down. I don't know. But this is where we are. Very, very interesting start to the week. And of course, folks, it's the last trading day of the month, the last trading day of June. And so the way today ends up, even though it's the first trading day of the week, it's a little bit weird because, we're ending the month on the first day of the week, which is not common. But so both of those will be in play. The first day, everyone wants to get going. Everyone wants to look for new opportunities. We're looking for new chances. Which way is the market going? Which sectors are hot? Which are not? What's happened over the weekend? What's the political situation doing? So everyone's thinking along those lines. Where are the opportunities? But at the same time, hedge fund managers, bankers, and the rest of them are thinking, how can I get out of the market as quickly as possible and maximize my profit before the month end comes around in a few hours' time? And so they're all wanting to, and remember, it's the end of the half and the quarter. So this is a big day today, folks, and these folks are going to want their half annual bonus. They're going to want their quarterly bonus. They're going to want their monthly bonus. They want to be out of any risky positions. They want to be speaking to their, it's not health and safety, the guy who's in charge in every prop firm and every bank floor is a guy who's in charge of compliance and legalities and legislation and risk, the risk tolerance compliance manager. And they will be snooping around every single trader's desks at the banks, at the hedge funds, at the institutions today to make sure that they're reporting everything correctly. They've got no floating hidden losses that they're not disclosing, like Nick Leeson of the Rogue Trader all those years ago, hiding floating losses. So these health and safety of finance people will be all over them. And those guys are looking to protect their profits, get their bonuses. Everyone else is looking for new opportunities for the month, the retail traders. This rally in the stock markets has been driven mainly by retail, I believe. And retail is they're all in on this rally, and maybe not so much the institutions. Remember, it's month and quarter end, and we know what the folks at the institutions want to happen today. They want to make money without risk, as little risk as possible. All right, now let's carry on. Good day, Harsh Gandhi. Nice to see you too, from India, I guess. Marcin, nice to see you, mate. Greetings from Poland, from Marcin. Thank you very much. Harsh Gandhi, thoughts on wheat? Seems like it recently been shooting star bar, but just can't keep the solid green. Yeah, we talked about wheat. I think I covered that in some detail. Pablo, James, what is the target for natural gas? Is it still $3? I think I've covered all of that in some detail as well. I'm looking for either $3 or $4 to go in the opposite direction, essentially. But right now, we're trading dead in the middle at $3.50, and it's not a great zone to be trading in. We'll get a trade on soon enough. Don't worry about that. Ray, pound yen short. Are we any closer to the carry trade playing out? I hope so, Ray. I don't know. And you're talking about Jay Powell as well, Ray. When Powell goes and Trump gets his yes man or woman, and they start cutting rates, will the floodgates open to precious metals and commodities, etc.? I don't know about that, Ray. We just don't win any. Excuse me. Excuse me. I went to the gym this morning and overexerted myself, and I seem to have loosened some chesticles. Yeah, I don't know. You know, if they cut rates too quickly, we don't want to see like 7 rate cuts this year. We don't want to see rates cutting at like 1% or at 0.75 or 1.5. We want to see a slow, gradual cutting. It's not just that, it's the M2 money supply, which is increasing as well now. So I think they all go hand in hand. And if we do see a sudden, dramatic reduction in interest rates, it may actually be negative for the markets rather than positive. So is Powell going to go? I don't know. Will Trump get his way? Will he get the right person? I don't know. And will that person do what Trump wants them to do? I don't know. These are all speculative ideas which bear very little practical, real-time assistance in making trade decisions. Emily Trading, 35 RONTs, ZAR 35. Thank you so much, Emily Trading. Got a super chat or super something from Emily. Thank you very much. Really appreciate that. And Emily says, thanks for the great videos and knowledge. Thank you, Emily. Thank you so much for the super chat. I appreciate it. And good luck for your trading too. Wonderful. Folks, if you want to do a super chat, you can do so. There's a super chat button somewhere, and you can send a super chat, and I'll address your chat directly. Blue Gel says, is NASDAQ due for a decent pullback? Yeah, so Blue Gel, we talked about NASDAQ and how I think that these will pull back down to the breakout levels of the all-time double top, all-time recent, all-time highs, pull back to there, maybe a little higher first, like I explained earlier, and then a pull back to that level to exit the shorts if we sell at the top, and then to go back long again. But not very far up or very far down from here. I don't know. We'll see how we go. And today, as I keep on saying, it's the last day of the month and the quarter, so it's going to be a super interesting day, and could be quite volatile towards the end of play today. So power hour, the last hour of play today, could be really interesting and could be quite volatile. Tanil, thanks for your comment. Hey James, what happened to the natural gas head and shoulders? Is that old news? No, that's still there, Tanil. That natural gas head and shoulders is still there, and whether it'll play out or not is another question, but it's definitely still there. Let's have a look at that on the day chart. And I've pointed this out to you before. This is a massive day chart head and shoulders. And in fact, Tanil, since we last looked at this chart, it's actually performed and completed the right-hand shoulder much better than it was. If you remember last time we looked at this potential head and shoulders, the chart looked like that. And we had this missing right-hand shoulder, a weak, shriveled right-hand shoulder. But lo and behold, a little bit later on, we got the shoulder. So yeah, target for that head and shoulders pattern. And I'd be very surprised if it worked out. But I don't like head and shoulders patterns. But if it does work out, we're going down below $3, folks, and that will take us down into the mid twos. So, and the way it looks right now, it looks like it could be headed that way. But head and shoulders patterns are never real until this neckline is broken. I never know if it's a neckline or a shoulder line, but that line at the bottom there, the dividing line, the center line really, at $3, it's a big round number, of course. It's the big number that we've been watching forever. And when we get back down, if we get back down to $3, we probably have quite a sharp, steep bounce because everyone's watching that break line. Everyone's watching $3. It's a round number. It's potential head and shoulders. Everyone's looking at it. All the retail traders are going head and shoulders, head and shoulders. And all the institutional traders are going, this is going up. Or whatever's going on in the background. So yeah, it's still very much in play, Tanil, for sure. I'm not sure if it's the one that I think is most likely to happen, but it's possible. Everything's possible. Nothing surprises me in the markets ever anymore. Stopped surprising me about 5 or 10 years ago. So I never get surprised. Sean May, good stuff. Thanks, James. Thanks, Sean. Appreciate it, mate. Robin Hood, do you rely heavily on the COT report for trend direction? I observe the COT report, Robin. Yeah, I observe the COT report every week. I look at the COT report across all the futures that I trade, excuse me, including natural gas, gold, silver, stocks, all the commodities. And I do apologize for this hoarse, croaky throat, but I've been talking for about an hour and a bit as well. Yeah, so I look at the COT report, and occasionally I do COT report studies in my videos. So if you've been watching my videos, you'll have noticed that sometimes we talk about the COT report, particularly on natural gas, but we also look at it for some other instruments as well, mostly on the commodities. The jazz, your question is this. Hi, James. Are we considering the VIX anytime soon, excuse me, as tariffs would be back in picture again? Yeah, jazz, the jazz. The jazz, I keep on calling you. I'm going to have to just call you the jazz from now on. But Tejas is the correct pronunciation. Let's have a look at the VIX. Yeah, so VIX is pretty simple. It trades a little bit like natural gas. If you zoom out on the VIX, you'll see most of the time we're bumping along the bottom, and some of the time we spike up. Pretty simple. Most of the time we trade along here in this yellow block, and sometimes we go outside it. So my strategy, I don't trade this very often. Whenever we get down to towards the bottom of the yellow block, I like to buy the VIX, and I like to exit outside the top of the yellow block. And when that happens, I enter the VIX at the bottom, I get out at the top. I do it every single time. I've done it every time for the last 10 years probably, maybe 15. And that's the only way I trade the VIX. So not very exciting and not very, it's not the best instrument to trade. And occasionally you get a spike that you can trade. I've got to get better with my names from sort of Central Europe. Mukosi Demakovic. Greetings from Croatia. Let's just say, Mukosi from Croatia, good day to you. Thanks for visiting. I appreciate you being here. MD, what do you think about ETH? Yeah, ETH, similar to Bitcoin, basically. I think we'll, I'm waiting for Bitcoin. See, it's just dripping back a bit now, Bitcoin again. That top channel line is going to be important and difficult to overcome. But I think we will do it, and probably today. And ETH looks excellent. We got long at the bottom there on the dip down to the 100-period moving average and the trend line. We bounced up there, big sharp V-shaped recovery, reversal, back into the order block. We're still down below all of these moving averages though. That's the only caveat. The purple one is the 200, the red one is the 50, the green one is the 20, and the gray black one down below with the green arrow is the 100. We're below the 200, the 50, and the 20 right now. So that's a little resistance level that's got to be overcome, and also this order block. But I do think we've got to, whatever Bitcoin does, and I think Bitcoin's particularly bullish, Ethereum and XRP will do. And maybe even more, if people think altcoin season and alt dominance is going to occur, maybe some of these will do a bit better than Bitcoin, like XRP and Ethereum. XRP I like very much. I don't like the fact that this bull flag has been going on for 6 months. It's a bit too long. It should have bounced off the bottom here in the middle of the bull flag and broken out through the top. But we, basically suffering through another 3 months of sideways movement. But what I do like is that we're actually trailing and trading along the top of the channel and not the bottom. And that's a very bullish pattern. When you fail to reach the bottom of a channel and stick near the top, it normally means that the next move is going to be a breakout through the top. Same as if when it sticks near the bottom and fails to get to the top of the channel, normally means the breakout will be down below. So yeah, I like XRP, I like Ethereum, and I think it doesn't really matter. I think Bitcoin, if Bitcoin doesn't get going, these won't get going either. So once again, I'm a bit of a Bitcoin maximalist, I suppose, in my thinking as well. Sarah Mansouri, thank you for the session, much appreciated. Thank you for visiting, Sarah, much appreciated. Folks, I'm going to finish off now. I'm a little tired, and I've been at the gym doing leg day today. As I said to my private group members, it's pretty tiring and exhausting. I feel like I've been hit by a Buick or something like that, but I'll be okay. But thanks for everyone being here today, folks. Thanks, Emily, for the super chat, and good luck with your trading today. And I'd really focus on trying to get some longs on Bitcoin and trying to get long on the NASDAQ and the S&P. And we're going to hold on to our names, which are already very profitable, the individual stock names. Have a great trading day, folks. Please like and subscribe if you enjoyed the live stream, and I'll see you in the next one, probably tomorrow. And good luck. Speak to you soon.